In this section, we are going to talk about determining the momentum of the market before a breakout occurs. We're going to talk about two ways in particular, through the MACD indicator and the RSI indicator. Starting with the MACD, we've learned about the MACD indicator in a previous lesson, and if you remember, it helps us to find momentum, or in this case, the lack of momentum. MACD has the histogram down here that shows us the difference between the slow and the fast MACD line. When the histogram gets bigger, it means that momentum is getting stronger. When the histogram gets smaller, it means that there is very little momentum in the market. So how can we use this data to spot a trend reversal? Since MACD shows us momentum, as a market begins to trend and the MACD indicator shows us that momentum is decreasing, that would be a signal that the trend is about to end and a trend reversal is likely to happen. So for example, in this downtrend here, you can see that price was getting lower, 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 and that MACD was actually getting weaker, 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 which means that right here at this point when it crossed over, momentum was very weak, which means that this downtrend no longer has momentum and a reversal is likely to occur. And you can see that's exactly what happened here. RSI is another momentum indicator that can help us spot reversal breakouts. RSI is also good for seeing how long a trend has been overbought or oversold. If the RSI is above 70, like we've learned, it indicates that the market is overbought. And if the RSI is below 30, like we've learned, it indicates that the market is oversold. If you need to review RSI, go back to the section on RSI in the Common Indicators module. During a trend, you will see the RSI move into the overbought or oversold territory at some point. If a trend has produced oversold or overbought readings for an extended period of time and begins to move back within the range of the RSI, it is a good indication that the trend may be reversing. So as you can see here in this example of Euro USD on an hourly chart, we have an obvious downtrend, and you can see that there are multiple times when the market is showing oversold on the RSI, meaning that it should be a good time to buy. You can see here that as soon as it crossed back over from the oversold, this 30 line, and moved up here and got past even the halfway point here, that it definitely was a good signal that the momentum was switching and that this downtrend was ending. And you can see here that about right when that happened is when the trend switched direction and started moving up this way. So in this section, you learned about RSI and MACD and how these are really good indicators of reversal breakouts because they show us the momentum in the market. And if during a downtrend or an uptrend, the momentum begins to weaken, that could be a good indicator that the trend is going to switch directions and reverse on us.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.